Hello friends, I'm Oral David here. Welcome to Adventure Terrain Ventures. Today's video is going to talk about market timing, but it's a continuation of what we discussed last week, but we're going to talk about the second most important thing in trading. But before we go to that, I would like to just bring to your attention, we have here some QR codes in order to pay for the courses that we offer on our website. So we have the couple of different courses that we have, and if you would like to pay, you can use the QR code that we have displayed here. If you are a Paytm user, use the Paytm QR code, and if you are the WhatsApp PayZapp user, then you can go for the PayZapp QR code. For instance, if you would like to make a payment towards the Inflexion Point 2, the product, that is our course, then you can use this QR code for if you are a Paytm customer. Okay, now coming back to our topic for today, what we're going to talk about, as I said, is the second most important thing about trading. See, the goal of every trader, I'm sure, is to make consistent profits. And I would like to highlight the word consistent here, because that is the goal. We are not looking at, I'm sure we are all not looking at, making one or two profitable trades, but we are looking at making regularly profits. May not be every trade going in profit, but we are looking for trades that will give us a net profit over a period of time. That means we would have some income trades and we would have some expense trades. But as long as we see that our incomes are greater than our expenses, we would be having a final consistent profitable returns. Now, what is the second most important thing in while we are looking at market timing? What's the first important thing, as we discussed last week, I'm sure, is demand and supply. So we all know that demand and supply is the right place where markets usually turn, and we can try to time the market at these points. But just do not get too much engrossed in identifying these turning points that you forget to see the second most important thing. Now, the second most important thing is the profit zone. So what do I mean by a profit zone? So if at all the demand and supply zone is very close to each other, then we would say that there is no profit zone, because though the market may turn, it may not give you a sufficient move to give you a profit. Okay, you need to see that there is a sufficient amount of profit zone in order to be able to make a good profit. So just by looking at only the turning points, you're not going to be a great profitable trader. You need to also see a good enough profit zone in order to be finding good trades. So let's dive a little deeper into what I mean by profit zone. So this is a clear indication of what I mean by a profit zone. Now we need to be able to do our reward to risk ratio calculation. See, think of this being a supply, a zone where we are going to sell, right? So we need to first be able to measure the distance between the price at which we enter and our stop loss. Now that is going to be our risk. In case price doesn't move down in our favor, we are going to lose that amount. So whatever the distance is between the entry and the stop. Then the distance between the entry and the target has to be an opposing level of supply or demand. In this case, it is demand. So this zone is called the profit zone, because in case the price turns around here, it has to come all the way up till here to the next demand. So in this example, you can see that this much is the profit zone, which is a pretty big amount compared to a small risk of only this much. So the distance between the entry and the target is the profit zone or the reward. So if the reward is say 5 times that of the risk, then we say we have a reward to risk ratio of 5:1. If it is 4 times, we say it's 4:1. 3 times, we say it is 3:1. And in trading, it's never a good idea to pick up any trade where the reward to risk ratio is less than 3:1, because we always want to see reward being greater than the risk. 3:1, 4:1, 5:1, or anything greater than that is always good enough. Now, the very next thing that we need to focus on after we have calculated our reward to risk ratio is our position size. Now, in case we are going to take a very big position size, though we have a good reward to risk ratio, in case we get stopped out, our risk or the amount that we are going to lose would be a pretty large amount. And if we take a small position size, in case we make a profit, we would make a very small profit. So that is the reason we need to have an appropriate position size, and our position size should be adjusted in such a way that whatever the amount we are willing to risk, that should be our risk amount for each share. Okay, so always adjust your position size in such a way that we never lose more than what we are willing to take the risk for. So keeping all these things in mind, we take a trade. And I would just like to suggest you 2 points, to bear in mind while keeping in mind the profit zone and the reward to risk ratio. The first thing that you need to do is, in case you would like a reward to risk ratio of 3:1 for your trade, make sure the profit zone is at least 4:1. This way you can make sure that it's easy to get out at 3:1. And if you are looking for something like 5:1, then go for a 6:1 profit zone. I think you're getting the picture. The greater the amount of profit zone, go for one level more of profit zone than the reward to risk ratio you're looking for. And the second most important point is, do not wait for price to go all the way up to your opposing level. Get out much before. Why? Because there is competition at those levels. Just to illustrate, let me come back to this slide here. Now, if this is your entry point and this is your target, we are expecting that prices come all the way down to this demand. But don't wait for prices to come all the way and touch this demand, then only to take profits. Take your profits much before. When it comes very close to this demand, take your profits before that. Why? Because there is a lot of competition here. There are institutions waiting to buy here. So when many a times it may so happen that price may not even enter this zone, and it may just move up so quickly, and you may not really have time to actually exit your position at a profitable level. So let me also explain this with an example. This is a trade which I had taken, not really taken, but planned today, but eventually did not take this trade. So let me explain to you what happened and why I did not actually take this trade. So if you look at this chart, what you can see right here is, market falling, a period of pause, and then a sharp rally up. So this drop, a period of pause, and a rally shows us that there is demand at this price level. So I had planned to take this trade. This is HDFC on a 60-minute chart, and I wanted to buy it at 1918, keeping my stop loss just 10 rupees lower. So in this case, my risk is 10 rupees. If my risk is 10 rupees, my reward should be at least 3 times for a 3:1 trade. So I would have to keep my target at 30 rupees. But do I have an enough profit zone here so that I would make 30 rupees? So when price returned back to this demand zone over here, what you can see is a period when market fell, then a sharp a period of pause right here. Now the next candle, if it was a drop right into this area of demand, I would have only a very small profit zone, which is almost 1.5 times the risk that I'm taking. Now, since this profit zone is very small, it gives me a very poor reward to risk ratio, and that's the reason I decided not to take this trade. So there are times when I would decide not to take the trade based on my profit zone. So in order to have consistent profits in your trading, make sure you look for demand and supply zones for turning points, and also make sure that you have a sufficient profit zone in order to make a good profit. Let us now go to the chart of Nifty and let's do our weekly analysis of the Nifty and see what Nifty has been up to in this week. So here I have the daily chart of the Nifty. As you can see, this week Nifty has been very volatile. So we had a sharp drop here. It's quite interesting to see that this drop, it stopped over here and again prices started moving higher. Let us see this. What is the reason why this drop was stalled over here and why did price turn around? Now, as you can see this area here, we have a drop, which is a gap, then a pause here, and then again price rallying upwards. So this means that this area is an area of demand. And if I draw this demand zone from wick to body, this will be the area of demand. And as you can see what price did, it stopped exactly at this area of demand, bounced up and went again higher. Now, do we have any supply here? This is an area of supply, but it is not a quality supply level at all. We have a drop, a base and a drop. And this is not a quality level of supply. Why? Because you can see something what we call here as the wick of this candle going higher than the basing. So I wouldn't consider this as a good supply level, and this is a supply level here, a rally based drop, but it has already been tested with this candle. So I don't see anything stopping, any supply zone stopping prices from going and making new highs. So I would not still look at taking any short positions anywhere near to this area of supply. Let us also look at the weekly chart. As you can see in the weekly chart, we don't have any area of supply. So we are still in the buy mode only. So all we have to do is wait for price to come to good areas of demand and then look for buying opportunities. So which is a good area of demand? So this area of demand now has already been tested. So we don't want to go in for that. Again, we have to fall back to this area of demand right here. So if I see prices coming to this area of demand, that's when I will take my long positions. So that's all we have time for today. I hope you guys have a nice week ahead. Thanks for joining me. This is Oral David here. Please visit our website, that is adventureterrainventures.co.in, for getting more information about all the courses that we offer.